GDP calculates final goods and services. So every transit good that has landed at the port and has not been accounted for by the company as inventory doesn't go into GDP calculations. It is still deducted from overall number, right?
But when you sell that goods, it's not included. Apart from the value add on that product, that cannot be added to your GDP. I was in South Africa 3 weeks ago. I was surprised with the number of Chinese brands that I saw.
Tesla cannot compete.
Why Trump is worried about bringing Nike shoes back to Wisconsin? These guys are pulling ahead in dominant industries of the future. I think China is done. I think China, the horse have bolted.
Yeah.
I think what you should strategically be thinking about is how do you survive in a world where China is dominant.
Hello everyone, welcome to Drinks and Mics, brought to you by Naira Metrics. My name is Otumba Ugodre, the only Otumba in the house, of course, you know what I mean. I was away for a bit. I got some slander from, you know who, people who are trying to whip up fake news, people, fake news media, you know them, fake news. Anyway, I was away for work, doing God's work. Of course. But some people try to turn it around and make it look like I went to, I went to have fun. You know what I mean, Sam? And of course, we got here with me, the usual guys. We got Tunji Andrews to my right. What's up?
Hi guys, thank you for keeping Con with us. We did not miss him, so I don't know.
I know he did. By the way, we got Otumba.
But you held up well when he was.
Tunji did. I thought it was like a 5.
I think actually you did better than Ugodre.
Oh, really?
Better than, way better than
I saw that in the comments.
So you guys get okay. I see what's going on.
Welcome him back in the comments. Let him feel some love.
Mr. Samson, good to see you.
Likewise.
Welcome back. Got a lot to talk about today, man. A whole lot. By the way, I got gifts.
Oh,
nice. Yeah.
Oh, wow.
Yeah.
Oh, wow.
So you brought it.
But I got that was something special for Tunji, by the way.
Oh, let's see it. I'm curious.
I'm curious. But let me just start.
Why do I feel
it's just it's our merch, Naira Metrics merch. This one it was made abroad though.
That's lovely. Thank you. Thank you.
Was it China? Was it made in China?
No. Oh, well,
so it should be made in China.
You know what of course.
No, but these days made in. I mean, China is technologically dominant in a lot of fields. So made in China is not something.
I know these days, now that we've learned that with tariffs, things can be made in different parts of the world and
finally assembled somewhere, right?
But Tunji's own though.
Okay.
Let's see this.
Jesus.
Tunji's own was made in China.
Tunji, you have to wear this hat.
So I got Tunji.
I have to wear this hat for the rest of the show.
I got him.
Tunji, you have to wear this.
It had to be something.
Tunji, you have to wear this hat. You actually have to.
But sitting for me, all this while and everything. So Trump says I should hand this over to you for making America great again.
You know what, I'm curious.
Beautiful,
Does it say made in China?
It's beautiful. You want to spill that, man?
You've seen the memes.
Let him check
It was made in the Rust Belt of the US.
So this is
bring jobs back
having a
home.
better gift.
No, Tunji, you have to wear that for the rest of the show.
I'm so.
Oh wow,
This is weird.
it's just such a thoughtful gift. Thoughtful gift.
I love it. I mean, the risk I took behind this because everybody was looking at me like, "Is this guy all right?" Even the lady saying it to me, she's like, "You a Trump fan?" I'm like, "Yeah."
Could have been linked.
Love it, guys.
Such a good gift. Such a good gift.
So one day, hopefully, we will have Make Nigeria Great Again. It should be green.
Again?
It should.
Was it ever?
Did you say again?
It was
Maybe
once
make
great.
the Oyo Empire great.
Make Benin Empire.
Okay, let's just make Nigeria great. End of story. Green.
All right. So we'll dive right into
I thought
the
you
show.
were wear it for the rest of the show.
That's what I thought as
No.
well.
So I'm putting it in front of me so that every comment I say comes with.
Okay. All right.
Jesus.
Anyway, talking about Donald Trump, his country, the United States, came up was it last week with their GDP numbers. They basically regressed. You know, it wasn't a growth. It was the first reverse in a while, and it's got a lot of people talking and trying to figure out what happened. Donald Trump, of course, blamed it on who else but Sleepy Joe. You know, he said it was Sleepy Joe's fault. It wasn't his economy and all that. You know, Trump has a way of embracing good things and then pushing the bad things away to other people. But of course, we're here to look at the numbers and figure out what happened. I'm sure we all have views here. Maybe I want to start with you first, Arnold. Did you any views about GDP numbers? Anything? Was it surprising to you?
Was it surprising? No. I think for me, it's the next quarter numbers, the technical recession numbers is what I'm waiting for. Is the reaction I'm waiting for.
Are you expecting a recession?
Yes, I am. Technical recession, yeah. I mean, we talked about it in the last show,
buy
right?
sell hold.
Yeah,
He believes that.
the numbers come out lower.
He's full on
I
recession.
know that there's this whole rhetoric that there's a Russian imports and I think 41% or just above 40% increase in imports annualized. 41, right? So increase in imports annualized. I know there's some people in this room that think that we're going to get a normalization of that number, but I think some people, one person in this room, the Trump fan. But yeah, so for me, the negative GDP, no surprise. The next negative GDP won't be a surprise either. My own, for me, what I'm more working towards is how the market prices it in. What happens, how we react, and what happens and how we react is what I'm trying to figure out now, and how to position ourselves, or position myself. But no, I no surprise there.
Samson?
Well, I would say the market has a way of inflicting the most pain on consensus trades, right? Obviously, I think it's almost become consensus that the US goes into a recession, and I lean towards that camp. However, the data has been very confusing because there's been a lot of anomalies, right?
Michael.
So, for example, the import data was very, very strong. Obviously, non-farm payroll was very, very strong.
Yeah.
It does appear that there's been a lot of front loading of demand, right? And typically,
Obviously because of the China tariff.
So there's been GDP that, in my mind, has been borrowed from the future that has turned up in that GDP number. So, and usually when you build inventory, right, it's usually incremental to your GDP, right? But when you spend the inventory, because the GDP measures your aggregate production for that period. So that inventory that then gets spent in the future period, it's not production.
Yeah.
So what then happens is that you can have consumer spending even if it holds up, but because you are spending production from later periods, what then happens is that your GDP actually slows down, right? So that's one area for me that I am trying to wrap my head around. And obviously, I think NFP has been strong largely because in order for you to be able to process the scale of inventory build,
When you say NFP, what do you mean?
Non-farm payroll.
Okay.
In order for you to be able to process the scale of inventory build, you've needed to add to payroll to process a lot of those inventory that you've had to import. So in order to have a real sense, and then the third point I wanted to make is we have to remember that the reference period for non-farm payroll is 12th of the month. And Liberation Day is the 2nd of the month. So really, the real impact of Liberation Day uncertainty hasn't come true in the numbers. And then when you look at soft indicators of consumer spending, which in my mind has really been the fuel behind the last 2-decade expansion in the US, it's also deteriorating. So I do agree with Arnold that the economy is weakening. But again, I have to be a little bit humble to sort of try and figure out, okay, why is the market where it is, right? So that's one. And we can have a debate as to why, because I think there's been a lot of retail high velocity money in the market.
Yeah.
Large, big pension funds that are long the US and have not liquidated, but I suspect hedging ratios have been going up. And the reason why is that you have this interesting trend of strong performance in the Mark 7, but yet you still see dollar weakness, right? So when you are not sure with regards to, because when you're not sure with regards to what to do with your US positions, the first thing you want to do is try and hedge your currency exposure. Yeah. I think a little bit of that is happening.
So let me ask you, sorry. I just wanted to ask you, because I'm also trying to get a view on this, and maybe we unpack it on this show.
Yeah.
Because I'm looking at US stocks from a macro perspective and how I'm assuming, or I'm working on, I haven't started, I'm starting to work from the idea of their margins. They're going to see probably a crush or a reduction in margins. You have wage growth, you have tariffs, you have higher interests. How do you think that plays out? Do you think the GDP that plays out in GDP numbers and then plays out in the US corporates, and then obviously affects stock prices or stock valuations? Should I say? Because right now stock valuations, stock prices are I
think obviously there are technical arguments and there are fundamental arguments, right? From a technical perspective, one of the reasons why I don't want to use the word bearish, right? But I think I've been consistent here that I think that there will be a relative slowdown in US growth relative to the rest of the world, right? That's because every man and his dog is long US assets, right?
Yeah, of course.
Even every Nigerian that you speak to that is wealthy will rather buy NVIDIA as opposed to GT Bank. Right? That's just where it is. And if you look at the data, right, a function of how the US capital structure is set up is the rest of the world, right, owns around 32 trillion of US assets. And if you look at the data since COVID, the rest of the world has invested about 9 trillion in US assets that have to find a home. And typically when these assets get invested, so as emerging markets people, when you invest in your non-base currency assets, so European, Nigerian investors, Canadian investors, you would normally hedge your currency. Because when you are investing in your non-base currency assets, you are buying two assets. You're buying the underlying assets and you're buying the currency, right? When you speak to some European and Canadian pension funds, right, it's as part of a portfolio, right, you look at your currency exposure and you look at your FX exposure. Because the dollar has been negatively correlated to risk assets, your correlation coefficient means that your hedging ratio that your model spits out is quite low, right? So that means that a lot of people have gone into these assets largely unhedged because the model is telling you you'll be okay, right? That's obviously that has shifted in the last couple of weeks, right? And you're hearing increasingly from long-only pension funds and insurance companies that they need to manage their dollar exposure, and also they need to reduce their US exposure. So I think there's that secondary thing that hasn't happened outside of this retail driven improvements in the market, right? Because
are you saying the stock market?
The stock market. Because like if you have bought the dip over the last 2 decades, you've made money, right? So the natural psychological intuition for most people is to buy any dip. But I want to make one very important point. When the market regime shifts, it often takes a long time for the market to acknowledge that. And I'll give examples. During the tech bubble, which is a very similar period to the current one, so I'm talking about the internet bubble, the NASDAQ first crashed in 1999. Right? You went through a long period of US exceptionalism where it was only about US internet stocks. And then we went into fever pitch, and then the market crashed in 1999, and then people bought the dip. And then we went back to an almost all-time high on the NASDAQ. And then we crashed in 2001 again, right? Then reality sets in, right? From the lows of 2001, it took.
But 2001 was also because of World Trade.
So that was but the peak to trough was not World Trade. The terrorist attack had an impact, but the peak to trough was basically the highs of this US nationalism disappearing. When we got to the lows of 2001, it took another 10 years for the market to get back
recover.
to its previous peak. Most people who are investing in the market today haven't seen that world. Like I started my career during the subprime crisis, 2007. The first time it became apparent that there was a problem was when we had the BS10 issue.
Yeah.
That was in February 2007.
Yeah, remember.
However, the market was still on a tear. It wobbled a bit, but the market is always in denial, right?
Yeah, of course.
And then it's until September 2008 when we had Lehman
crashed.
and then you saw that massive drawdown,
Yeah.
right, to 666. I think that was the lows of the S&P at the time before it rallied. The point I'm trying to make is that at inflection points, there are always doubts because people have rules of thumbs that they've built in, right? The challenge, however, with Trump is this is the first time that I'm dealing with a politically induced regime shift. Usually it's economically driven, right?
Induced with regime shift. Regime shift meaning
Ideology.
So like when you deal with inflection points in markets, right? So you had the
Something
subprime
fundamental.
crisis, something fundamental is
okay.
broken.
So this politically
So this is
okay.
it. So but the regime, I don't think you can unring this bell. I really think the regime has shifted. The debate that we should have is how has it shifted and is it shifted in a positive or negative way? But we are in the
Which
middle
regime
of
is what
As in the-
when you say
the
regime, what
investing regime,
Exactly.
the investing environment.
Okay.
Yeah, the rules
of
that-
investing.
of
Okay,
investing, right,
Because a
yeah,
lot of things
yeah,
that
yeah.
underpin that has also changed.
That's
Trade has changed.
Yeah.
You know how
I'm not
interest
sure a
rates as
lot
well.
of investors.
Well, please, I've been talking for a long time, and I like to hear contrarian views. So let's talk. Let me listen to what
come to you anyway. So let's get to this point.
So first of all, you do know that GDP numbers. Let's start with GDP numbers. I do not think, and I did say it last week. So I want to start from the fact that we need to be clear that the statistics office in the US, like every other statistics office in the world, is meant to be free, right? Let's start from there because
Did you say fake?
No, free. As in,
Okay.
not outside the
Are you trying to
government, but-
attack the credibility of the
No.
statistics?
I'm
office? 'Cause
trying
that's
to
Trump's
say
style.
no.
What do you
Let me
mean?
Let him land. Let him. He won't do that.
No. So I'm trying to say that every statistics office at least tries to be even not totally independent, but to some great extent. So we can say there's some level of credibility in the numbers. The headline that went around town that it was based on import numbers came from the statistics office, and there's a reason to it. So if you understand how GDP is calculated, and I do know that I saw one Chinese guy on the internet who was discounting imports as inventory, which is true, but it has to be a finished good for it to be inventory. GDP calculates final goods and services. So every transit good that has landed at the port and has not been accounted for by the company as inventory doesn't go into GDP calculations. It is still deducted from overall numbers. So, and also, do not forget that we're even talking about full goods. There's also raw materials, a large amount of raw materials, parts and pieces that have not yet been put into the final. And because it's not yet finally put together, it cannot be calculated as a finished good, which is what GDP calculates. So you can't even put it into inventory, right? So it is somewhere here, between here and here. And that is why the statistics office, and if you see the actual report by the statistics office, check the footnotes. You would realize that the statistics office was trying to emphasize that a lot of these things are raw materials. You need to understand that this is, just check.
But I thought they said that in the calculation of the actual deceleration in the US, the major reason was because they had a lot more imports.
And that's
a
what
lot
I'm
of people
saying.
front-loaded
So-
imports.
so
I
I
think
think
those
She's making because typically the argument that you make is import is deductive to your GDP
So you
calculation.
deduct import, so
But
that is
inventory,
why you had a pull down.
Yeah.
Now, those goods between the first Q1 numbers and Q2 numbers, those goods would either have transited into inventory to turn into a positive, or become final goods and services and be sold. One of the two will happen, right?
But when you sell that goods, it's not apart from the value add on that product, that cannot be added to your GDP.
No. They've told the final number will be added to the GDP. The way it is done is that the import is deducted, and then the final number. So if the raw materials were 3 naira, and the final number was 7 naira, so you add 7 naira, deduct 3 naira. And all the other factors of production that make up that.
Why are you guys
So is this you saying that
This is
you saying
I mean, I'm a child accountant now. Come on.
I'm not sure I agree.
So Tunji, is this you saying that
confuse me?
this is where it normalizes? Is that
I think
that's the point
that's
you're trying
this
to make?
argument, but I don't buy it.
argument is simple.
Yeah.
My argument is simple, right? Q2 will see a lot of the goods in transit, a lot of the raw materials, things that were not yet ready to go. Because who declares
go
inventory?
on.
It's the business, right?
Yeah, so go on.
And for the business to declare inventory, it has to be a final good and service.
Sorry,
Okay, I get it. So it's the same thing with. I think it's the same thing everybody's saying. So the point is that the reason why we had a deceleration in Q1 was because
There was
a
a
lot of
front-loading.
companies front-loaded imports, and GDP is basically consumption plus investment plus government expenditure,
Minus
less
imports.
exports, less net
EX.
exports.
Yeah,
Isn't it?
yeah,
Exactly.
yeah.
So I
Right.
think my counter. So it's unless I can't remember. So it's very difficult for me to.
If we agree to this, and then we mean we have goods in the store, right? 41%.
So your point is that it will ease out by Q2.
Exactly.
Yeah,
so my
that
thought
makes
is
sense.
simple. My thought is simple. Q2 would see a lot of that,
But is that by Q2 to the point where it's
But
positive?
what you're missing,
seeing
though,
is a
Tunji-
GDP growth, or you still see
so the US decelerated by 0.3%.
yeah.
Right.
So easing out there means it turns
if
positive because 0.3 then
and
in that
my
sense is
simple
marginal.
calculation is this: remove the excess imports. The US did not contract.
Good. So my own calculation is this, right? That's fine. But what
But the
if
US
consumption expenditure reduces?
decelerated though.
Agreed.
No, what if consumption
did not
expenditure
contract.
reduces?
What?
What if consumption expenditure reduces? And
No,
that's what
even-
people are
even
saying.
in
So
Q1 it
consumption
did
expenditure
reduce. It
could
did
exactly
reduce.
so it could
That's-
reduce
yeah.
more.
For me,
So if that reduces more, then that could be another
for me,
contraction.
that is more important.
Yeah, that is more
the point
important,
that Ogeje
actually.
is making. In my mind, is more important than the statistical significance
Oh,
of
yeah.
the imports, because the US is a consumption-driven economy, and wage expansion and income expansion has been the primary driver of US growth. So any signs, right, of weakness there is negative, and the signs are becoming increasingly pointing to that direction. Whether it's enough to tip it into a recession is a matter of debate, right? But ADP has softened. Services ISM, right, have softened. And obviously, the bulk of people, the service economy in the US is quite significant. So ISM services are pointing towards recessionary kind of numbers, right? So it's that softening in income and softening in wages, and also like reduction in even federal expenditure, because a lot of this excess income has been coming from these big deficits that Biden has been running, and this has been circulated into the economy and is leading to higher imports in people, higher income in people's pockets. You're unwinding a lot of that. This is before you then add to the complete freeze of trade that has happened between the likes of China and the US and the impact on that. If you see what freight rates are doing, if you see the number of ships landing in the US ports, they are decelerating at COVID-like pace.
Yeah, even the ones leaving Chinese as well.
Right.
Yeah.
So
It's happening in China too.
Yeah, the
so-
ones leaving
I mean,
Chinese.
yeah. I think
mean, ships are getting turned back
obviously,
anyway.
Yeah.
Yeah, it's COVID is almost like shut down, right? So we're going to start looking at potentially empty shelves in the US,
Yeah.
right? And I can't see how such uncertainty for businesses and such uncertainty around income and the pressure on that. And obviously, when your shelves start to empty out, what do? You shed labor.
So
And the US is really the what I call the flexibility of the US labor market is impressive. They can fire as fast as they can hire. That is a core strength for them.
And this plays out in Q2 for me.
So the thing,
it plays out in Q2,
guys,
and it plays out by mid.
You look at job numbers. Job numbers improved. I'm waiting to see inflation numbers also. Those are the two key factors that play out for me. And also if the Feds decide to cut rates or they do
They
not.
can't cut rates.
I
All right,
suspect
guys,
they will.
we got
So
to
I'll just say one thing.
Yeah, say,
Inflation
say.
expectation
Yeah.
in the short run is trending close to 4% in the US. Market pricing of, but the debate is that is it transitory? Because everybody expects interest rates to go up and then come back down.
I think we've said it before we started the show. We really do not give retail purchasers enough credit, because the US has started to see a bit of transition in terms of how people are buying goods and services. They might have softened because of the uncertainty, but you are starting to see that people are just evolving in the way they buy things.
Sunjay, when did that change?
We'll see. We gotta move on, guys. Anyway, talking about demand and when the data changes, oil prices took a hit during the week. At some point, Brent crude was below $60, crept back above $61. And part of what we've heard going on is demand as well. So like we all mentioned, ships are turning back, orders are reducing. And so it appears there is a weakening for oil, global demand for crude oil. In fact, I read somewhere that 10% or so of crude oil demand is basically from ships and airplanes carrying, moving goods across the world. And so because of these tariffs, you're seeing a lot of inventories and orders being cut short and being reduced because of all the uncertainty that's going on around the world. And of course, OPEC Plus countries met as well. And then they've also decided to ramp up crude oil production. Just curious to know, what's going on, guys? Are we ushering into a new era of lower crude oil prices, or is this just all temporary? Arnold.
That's a jam question.
It's a serious question, though, because, I mean, we all knew, or, my view on oil was always going to be it ends up softer, right? Oil is going to end up softer, strain on global consumer demand, and then tariffs kicks in. So now you're asking me a question. I'm actually unwinding it in my head, and I want to say yes to your question that this is oil gets softer. I mean, oil stays where it is, right? What is it? 59 between 59 and 65.
Yeah,
it got to 59 on Monday
at some point.
Got to 59 on Monday or
midweek,
so.
$61.
Yeah, so I mean, I think that this. I mean, we talked about this a few weeks ago, and my view was we could get a weaker oil. Is moved weaker than I expected.
So why are the Saudis deciding to pump more?
So I think
what's the game here?
Remember in 2022 there was the voluntary OPEC cut of, I think it was about 2.2 million barrels. In addition to the compulsory one, so I think total production that they took out of the market was about 5.8 million barrels.
In 2022?
So before 2020, around COVID, I think they took, if I remember correctly, about 3.6.
Okay.
And then in 2022, they then extended it.
I remember there was a period of they have
2.2.
Yeah.
The truth is, what is happening is two things. OPEC members are cheating their quota, right? And the US
and they've had enough. Saudis have had enough.
And the US also have been stealing market share from the Saudis. So a lot of the heavy lifting has literally been done by one country, right? And I think in a slowing global environment where the demand for oil is expected to slow down, if you prioritize pricing, your market share loss accelerates.
So you have to push.
And so the Saudis are figuring out that, you know what, if global environment is going to be soft, I can't lose my customer.
Yeah. And I think that's what it is. Because I actually agree with that.
This is not.
I actually agree with that. That's what it is.
The Trump camp essentially trying to, twist the Saudis to perhaps push more.
How so?
More crude. I don't know. I mean,
Trump,
one of Trump's key policy objectives is lower energy prices for Americans.
What does
we're already seeing the likely impact of tariffs on inflation numbers. So if energy prices go down, then
to the
Saudis push more volumes, lower prices. They still end up, with the same number anyway. Technically, that's what I read here.
So lower energy prices in the US, right? That's what he's gone for. Yes, he did say it in.
He said it for
100 days. He tried to push
he
it,
was
but
saying even when he came in January
and said that it's not true.
Yeah, but when he came in January, he was saying that he wanted lower oil prices.
$1 something, and they were like, no, it's like $3 or something like that. But the thing is, I do think one of the things I've always known about oil is that it likes conflict. And if you look at the regions where oil comes out from, there are beginning to be rifts and pieces of quarrel here and there that could quickly escalate, right? And the escalation of those things usually means that, a bit of uncertainty, crude oil prices start to increase. And I'm not trying to say somebody is behind it, but you are beginning to see, this country slap this country, and then this country is like, no, why did you slap me? Those kind of things are beginning to rear its head a lot more often than it used to. And if you look at all those countries I'm talking about, they all have either significant oil deposits
But that should mean oil prices should go up now, isn't it?
Yeah, but the thing
exactly.
is,
So
it's
I'm
still
not
playing
worried
out,
about
though.
it going down. I kind of feel it will either hold or might just increase a bit. I feel so strongly. The world we are living in.
I think with the conflict we're seeing,
it's the problem with this commodity is that it's very, very sensitive to demand.
Exactly. Super sensitive.
That's it.
It's very,
And
very
the
sensitive
IMF
to
also
demand.
mentioned that, look, they are seeing global demand wane. And so, IMF also just reeled out their numbers. A lot of countries' GDP growth numbers have been revised downwards because they think demand is going to reduce.
Yeah.
And so, if there's going to be reduction in global demand, isn't that going to affect global oil
Yeah,
prices?
because if you look at the global...
Isn't that why we're seeing what we're
so
seeing?
if you look at the global oil cost curve, maybe outside of the high-cost producers like the shale guys, most people are much lower.
Yeah.
Right.
Break-even.
So typically the way commodity price, right, they either price at the marginal cost of producing the additional barrel, right? If there is demand at that price. If that demand disappears, then suddenly there is literally nothing stopping you from just
going
dropping down. Right. So the real fundamental, in my opinion, flaw for the oil price is what your marginal cost of production is. Because below that price, you take production out of the system. And if you do that, then it will re-equilibrate and the price will adjust again.
It does take a lot of while for you to now shut down your rigs again.
Let me explore Tunji's conversation about these wars and rumors of wars, because I think there might be something there, because we're just seeing a new thing with India and Pakistan, right?
That's what I didn't want to say the name.
But these are not oil producing countries.
No, but
but he's talking about conflicts and the demand conflicts.
So oil should...
But Trump also announced that they've had a ceasefire with the Houthis. So, I mean...
They did.
That's what he said.
So they capitulated. That's the word.
Yeah. He said they came begging. They came begging and asking them. They don't want to be bombed.
But I think
anymore.
I think the biggest one of them for me is the India-Pakistan thing, because it doesn't make a lot of sense. They've been able to coexist even though they don't like each other very much.
What has that got to do with oil?
No, but all of a sudden it's like just escalating. No, India.
What has that got to do with oil? That's the point.
I
I heard somewhere that somebody said,
right?
Sam, someone said crude oil could get to $30. You don't see that scenario happening this year?
I don't.
Yeah.
To be honest, I don't think this year.
Demand, global demand. Tariff issues. Singapore came out yesterday and said, you know what, no more trade with the US. I heard that as well.
Careers have
Is the
been
person with
ruined.
IMF?
Careers have been ruined on calling oil, right? So, so I have to be very careful. So I don't know what oil price is going to do over a short period of time. But unless we have a credible alternative, in my mind, to oil as a fuel, right? I think even if you see a $30 oil, it's not going to be for a long time.
What does this mean for Nigeria, though?
Good question. This is something I've been spending a lot of my time on lately.
Yeah.
This is where, so there are two things. One, I think we have to understand that oil is not really a very important commodity for our GDP, right? Oil is 6% of GDP.
Of course.
Right? And so sometimes when they report non-oil and oil GDP, I always like, but it's better to put agriculture and service separated instead of oil, because oil is almost like a rounding error. It's however important for FX liquidity.
Of course.
Right? And it used to be important for the fiscal revenues, right? But in the last 3 years, less so. So put numbers to it.
But isn't that where we are? Anyway, go on.
Yeah, put numbers to it. I will tell you what I think, and I'll tell you what is giving me a headache, right? So oil roughly has been I think last year oil was 30% of federal revenues and about 21% of total budget, right, in terms of budget expenditure. This year, 2025, was when we expected a big improvement in oil. So oil was supposed to, because the budget was supposed to go, I think 21 trillion oil revenue from 6 trillion last year. And it was going to be roughly 51% to non-oil revenues. There is a risk to that revenue, significant risk to that revenue number. So the question then becomes, if there's a risk to that revenue number, what are the implications, right? Our budget is interesting in the sense that in the absence of ways and means, and I think I have to assume that ways and means doesn't exist, right? You can only spend what you can raise and what you can fund. Once you are not able to raise or fund, you cut something in your budget very, very quickly. And in Nigeria, what we usually cut is our capital expenditure. So if you look at capital expenditure implementation, outside of 2023, that was because Godwin was willing to give them whatever money they asked for. So 2023 is an anomaly. We usually implement between 40 to 50% of what we budget, right? So when I look at the growth in oil revenue, right, it mirrors the growth in capital expenditure in the budget. So when the oil revenue take a hit, I think the capital expenditure will just get switched off, right? And so I don't think there's one, because the fear, right, in the market is that, the deficits are going to be a lot wider. So I think what is just going to happen is that the government spends less, and then we then have to think about what the implication of less. And that's
what my next question was going to be. What does that mean?
Yeah.
Because I mean, you have a government that is very keen on capital expenditure spend as one of their own, signature.
They can't steal the money
signature
now.
Performance. So what are they going to do? What does it mean? You don't spend. And if there's no capital expenditure in the country, so what does that mean for Nigeria's economic growth rate? I mean, somebody here to my right predicted 5% GDP growth rate. So what does that mean?
He didn't see oil.
It threatens that rate.
Simple.
What does that mean? I mean, is your 5% GDP growth rate still, feasible?
So
we haven't even gotten to exchange rate, but let's talk about that.
No. So first of all, the argument is valid. It's always the normal trajectory in terms of capital expenditure suffering for everything. I however do not think that this government will follow that tide. I suspect that we're going to aggressively borrow to be able to keep it going. Generally because
maybe panda bonds.
So wait, we've seen quite a level of movement in terms of trying to woo new investors. But here's even the thing: everything this government is trying to do rises and falls on the back of infrastructure development.
Exactly.
If infrastructure fails, this government fails.
So you think that regardless of what oil does, it's still going to focus on spending?
So it's not about. So this is not a case of I'm trying to analyze. I'm just telling you clearly. If they fail on infrastructure, they failed as a government.
So what are they going to do if oil prices?
So let's assume we have this. They have to keep it going.
Yeah, but I mean,
it's a steam engine. Okay. They must keep running. Right?
Okay, I want to own a
Minister of Finance. I want to have scenarios
a mansion in Eco Atlantic. I can't fund it.
You borrow now.
Nobody will give me liquidity.
But we had the Minister of Finance.
No, but if nobody gives me
but there's a difference, right? There's a difference, right? Your options to funding a building, an apartment or whatever at Eco Atlantic is you get credit from your bank. You probably get a mortgage. Those are your options. Nigeria has quite a few options to be able to do the infrastructure projects they have. There's apart from getting Eurobond loans, you could do the swaps. There's so many things you can do to be able to keep the infrastructure.
But you have to also.
My thinking is people might want to understand the way one of the things that China does to be able to keep its regions growing at the rates that they grow at is one of it is serious infrastructure building, even if nobody lives in those buildings.
So that's just the spending, building roads.
But the difference here is that there's that corridor and please correct me if I'm wrong, that
Belt and Road,
coastal road coming from that is from
Eco Atlantic to
Lagos Calabar coastal road.
So it runs through that Lekki corridor, right?
I have a view that road will end in Ekpe, but
No. But so this is my thinking, right? So a few weeks ago, I had something that took me all the way to Aja. No, just before Aja.
I know what
So
that
I had
was.
to go in there, and then I saw the road itself. And this is the thing, right? So I was passing the road, and this is something significant. So I was passing the road, and I saw estates around it. Now I thought to myself, the way those estates were created, if that road did not exist, those estates would be looking at very poor prices. But because of the way that road is, and the way it is large and very, the kind of way it is being built, you see the multiplier effect in terms of asset value for those houses in those areas. So my thinking is you need to keep this infrastructure thing going.
yeah. But our question is how.
That's what you have.
So
an answer.
$30.
I know. Are you seeing panda bonds happening here? anytime
Yeah,
soon?
because
like,
you
did-
actually
did-
mentioned it, and I was like, hold on a minute.
They'll give us-
It's two things, right?
I mean, I'm still constructive
what's
on
standard
Nigeria,
bonds
by the
anyway?
way.
So-
But the data
Yeah,
is
look
shifting.
for
so
where we get the money
because your question is who led to you, especially at $30
panda
a
bond.
barrel. $30 a barrel. Everyone thinks you're high risk, right? So your yield goes up, your risk goes up.
But the
your cost
Chinese
of
don't
borrowing-
think so.
But the Chinese, the whole idea of panda bonds is borrowing in Chinese, in a local Chinese currency, right? Borrowing local Chinese currency. So what we're having is you're having a huge soar or increase rather of American companies borrowing in China. Or let's use Eurobonds. Eurobonds
I
are
see a lot of African countries do that as well.
in China.
Yeah, borrow from China.
But it's in dollars, right? Are they borrowing in dollars?
In Chinese
So
yuan.
the idea of panda bond is making it official, where you have a sovereign bond, and it allows outside investors to also get involved. And one of the reasons why it's interesting is because if oil, for example, goes to $30, you're going to have a dollar yield go crazy. Chinese yield will go crazy, but the Chinese bonds are 300 basis points cheaper than US bonds.
Yeah.
So it could be interesting
I
for us
can
to look
even
at.
tell you for a fact that the Chinese would be more than glad to take over that project as infrastructure for credits kind of thing, because they need to keep building. They just need to keep building, and this is you're giving them something to build, and you're saying you're going to pay them.
And China's
No, I think we
China's going
shouldn't.
through a huge stimulus
we
now as well,
shouldn't-
right? So
the
there's a lot of
problem that I
liquidity there.
have is we
You don't want to borrow out.
we
borrow
are
yourself
we
out.
are we obviously high oil price is good in terms of the flow of FX liquidity into the economy. In a low oil price environment, two things happen. One is that your FX liquidity flows reduce, right? Although one would argue that
Which is where I was going to go.
Sorry,
to.
again, your effective liquidity, of course.
Yeah. What does it mean for the naira? That's what I was going
I'll
to go
come
to.
to that, and then the second part is that because like if you can't raise the revenue, and you can't fund in the market because market liquidity conditions are tight, right? So it's not like if it's tomorrow,
What do you mean by that?
right? And because of the tight monetary environment with very
Globally.
very high, Nigeria, very high CRRs. Very high banking sector liquidity. If you look at, for example, even Zenith numbers at the end of 2024, I was taking a look at it the other day. They had like 800 billion plus in SLF. I mean, let that sink in. This is one of the most liquid banks in Nigeria. Going to
In
the
SLF?
Yes, going to the CBN window to borrow liquidity, right? That tells you how tight liquidity conditions in Nigeria is at the moment.
So how come we're always having oversubscribed FGM bonds and
That's
oversubscribed
a very
commercial papers
that's a very interesting debate and something that we've been talking.
It's a conversation.
Like, where's the money coming from?
Yeah, so like who's buying all those things?
The Providence commercial paper, right? They wanted 50 billion. I think they got subscribed to 70, 80 billion.
Exactly. So where's all that money coming from?
Yeah, so it's a question.
That's just something I can't figure out.
Where's the
Like,
liquidity?
there's so
That's
much
what
tight
my-
liquidity out there.
Yeah.
At least that's what the numbers tell us.
Yeah.
But then when you see deals being pushed out, they're all oversubscribed.
liquidity.
Even public offers are oversubscribed.
But
But going back-
I suspect, I don't know, but there is this, I feel like there is this overinflation of subscription amount that may be happening, largely because it's been very profitable to go into primary markets and flip in the secondary markets. And because of that, what tends to happen is that because everybody then tries to do that trade, even people that don't want to hold for a long period of time. And because you know everybody wants to do that trade, in order for you to get the allocation that you want, if you're going to bid for 2 billion before, because you know everybody will be involved and you might not get
And last
allocation.
you just get one.
So you just
billion.
go and bid double the amount or triple the amount. So I don't really know sometimes what the real, true underlying demand.
I mean, even if we don't know, but what's funding it? Even for the ones that are subscribed, and sometimes they do accept the over subscriptions. Anyways, yeah.
Most of the
So
time,
what's? I mean, have we seen round tripping going on? I don't know.
It's a debate. I don't have the answer, to be honest. It's something that I've always asked myself, right? How can we say liquidity conditions are tight, but somehow like
all these issues come out and the market is ready.
The market's ready to absorb it. I mean, obviously, despite having tighter liquidity conditions, we have to also remember that our friend, we're still suffering from the legacy of Murphy and the amount of money that he created, right?
Yeah.
So maybe we are seeing some of the legacy effect of that.
Exchange rate. What does this mean? I mean, like we've seen a little bit of pressure hit the Naira lately.
But I mean, we've been there before. What happened in 2015 when oil felt like it went to $20 overnight?
2020 even.
Right. We saw what happened to us.
I know. So the point now is
that was different. I'll tell you why. For me, April was a very interesting month as far as exchange rate test goes, right? Because when the risk environments in the market turned post-Liberation Day, my fear was that the CBN was going to attempt to over-defend the Naira and keep it in that 1.5 peg. I was pleased to see that an adjustment happened, right? And they did intervene, but the market's functioning was very orderly.
Yeah.
You didn't have long backlogs. If you wanted your position, you got filled. It may not have been filled in the price that you want, but that pressure valve of dealing with actually functioned. So for me, that was a positive. And then when I look at how much the Naira depreciated relative to similar economies like the Rand, the Turkish lira until Erdogan did his madness.
We probably depreciated more even.
Right. You said the Turkey, the other currencies depreciated more than the Naira.
I thought we even depreciated more.
So for me, I thought, okay, in line with risk assets, our currency performance was decent. Obviously, remember, like for me, I was positive because I felt like the oil flow, as far as our exchange rate stability is concerned, is a future event and not a current one. And what do I mean by that? We haven't really achieved exchange rate stability on the back of oil liquidity because you had a subsidy regime, you had the energy infrastructure integrity thing I spoke about last time, and so what I was positive about was the future impact of rising fiscal oil revenues, relinking the oil revenues, barrels sold back into the fiscals, back into the reserve. I think the challenge with that now is that the outlook for that is now uncertain, and you have to bake that into your base case. So I had a view, right, that we had the Naira had a strengthening bias, and that is a view that I have always spoken about here. It is very difficult under this environment to argue that we will that bias exists. But what I don't see,
so you're saying your short term Naira is weaker. Your short term.
I think we can maintain a range of between 1.5 and 1.7.
1.7.
Yeah.
Tunji, I mean, I don't know if you've read views from the
Tunji, what did you say?
Views from the finance minister. I mean, I think he was asked as well what he thinks, and part of what he said is that, look, there's scenario planning going in. There's a committee that's been put forward to help look for alternative revenue for the government in view of oil price drop. He also mentioned that you have got new people in the NNPC, so they've been charged with increasing crude oil production output. And, you know, government is also looking for other ways of improving efficiency, trying to cut waste and cut cost. Are you confident with what you're hearing? Do you think that maybe they have a plan beyond what he's just said, or beyond his rhetoric, to try and maybe stymie the situation.
It also speaks to the question Sam was asking, that where do you get the money from? I believe, it just, this question also kind of just made me think back to a lot of the posturing of the CBN, the finance ministry, over the last couple of months. You can feel they know that there's a lot of uncertainty coming. They're smart people, right? And they know that they need to get money in one way or the other. It just looks like, the sure ways are not going to be as sure as we thought it would be sure, right? So they're trying to open new opportunities to be able
taxes,
to get.
you see.
I don't think taxes are going to flow in as quickly. The turnaround time to be able to get more people into the tax net.
I think tax is a 2026, 2027.
Exactly. Yeah,
trade.
we'll get there, but not in the short term. So they need to get money in. So I don't envy them. I'm sure they have sleepless nights on where they're going to get money from. But I do feel, and this is the truth about it, I do feel that Nigeria has a bit of momentum going for it right now that I think we'll be able to be fine. We might not meet all the grand plans that we're trying to achieve, but I think we will be fine enough to be able to meet some of the.
What does fine Nigeria look like to you?
Tunji,
we'll be fine. What does
I think this is it, right?
This is at $30.
I had 30. I don't know if we're gonna. I think we've slowed down.
I'm not saying $30.
Okay, I thought we're talking the $30.
So no. One point.
That's what we're painting.
One point I would like to make is, because of the removal of subsidy, like I made this argument in my last conversation, was there is almost for Nigeria an effective premium on the oil price that we are getting, right? Because you are now making more from every barrel of oil that you are selling. So two things are happening. Although production slowed down a little bit in the last data that I saw, but production was trending up and has been trending up for a while. So you're getting more barrels out of the ground, right?
Your take rate is also...
And your take rate on that barrel is also increasing, right? So which is why, like I made this argument that, you know what, I don't even need high oil price in Nigeria. Oil price can stay between that 60 to 70.
You need a weaker Naira.
Not necessarily the weaker Naira.
No, we've got a weaker Naira and you get all the things you're talking about.
Extraction, the value extraction, as in the currency extraction that you're able to take from the same amount of crude oil because of subsidy removal has removed. So that is...
It's effectively an increase. So basically, if you're assuming that Nigeria is operating at a $50 oil price, or the world is operating at $50, but for Nigeria it might be 55, 60 because you are keeping more of those oil barrel revenues, right? Which is why I felt like you could see significant improvements in oil fiscal revenues, and I didn't think that initial plan that the government have of making 20 trillion from oil was unrealistic, even though it was almost a 3x growth versus 2024, right? Obviously, I think that goes out of the window now, right? And I think oil price will still grow, likely grow on 2024 numbers, but it's not going to be 3x. What I know is...
But that has impact, and that's what this
is. So two things. One is the immediate impact is... So what is going to happen at the government level? The government will have to cut, in my opinion, they have to cut.
And you think it's going to be capex?
They don't have anything else to cut. You can't cut debt service, right? Recurrent expenditure. Although recurrent expenditure, they managed to cut recurrent expenditure in 2024. I don't know what, but if you look at the data, the budgeted recurrent expenditure, if I remember from top of my head, was around 11 trillion. The year, when you see the actual number, was about 8 point something trillion. So somehow...
Or they just owed people.
So you can't do much. Let me use the word. You can't do much on recurrent expenditure. You can't do much on debt. The only fab you have. So then that reduces. But the point I'd like to make is, so it means that instead of spending 55 trillion, right, you end up spending maybe 30 trillion, right? 30 trillion within the context of Nigeria's GDP, where our GDP, nominal GDP is now trending towards 200 trillion. So the federal government is 15% of the total economy. It's not great because of all the infrastructure spending that could have added to the positive multiplier, but it's not the end of the world because I think there's still another 85% of GDP that have contracted and are showing strong. Actually, the non-oil portion of your GDP is accelerating much stronger. So I'm not trying to put rose-tinted glasses on this thing. It challenges the outlook, but I don't think it's that usual panic in the past where all hell breaks loose.
Yeah.
Remember, we have gone into a
Yes.
crisis.
Right.
We've gone through an adjustment, right? So it's not like we are going into this slowdown unprepared. We've made all the adjustments. For example, some of the direct impact of a slowdown in the economy is capital flight, right? In equity markets, where is capital flying to? There's no capital in the first place.
Yeah. We've already seen it.
So you have some capital flight that could happen in the bond market.
Yeah.
But the CBN is prepared, right, to help ease that liquidity pressure. And they've been able to grow their net reserves. And so when you look at how covered we are relative to our imports, like we're okay, right? So it's not it complicates the
Again,
outlook, no doubt.
we are
All right,
okay.
we gotta move.
We are fine.
We gotta move. We're okay. I had all the sound bars. No time to panic. I had all that.
Okay.
All right. During the week as well, China announced. I mean, we have China fans here, by the way.
I'm a China fan. I'm a Panda Bond fan. I think we start to see
China
some
announced
a change
a
in
plan
the
135 or
138.
$138 billion stimulus.
Okay.
As part of its plans to defend itself against any adverse impact of the Trump tariff on the economy.
Yeah.
And that kind of got crypto prices also.
It
jumping.
did not. It was not the reason.
I mean,
it was not.
Why the crypto prices?
It
Why the
was
crypto
not-
prices?
I don't know.
jump
ITG
there?
doesn't want to agree, but anyway.
Wait,
I don't
let's
Wait now, but
read the price.
we're
Read
gonna
the
get
price
there.
that it
We'll
went
get
up to
there.
now.
We'll get there.
Where did it go up to?
Calm
94,
down,
95,
97. We
97?
hit 97.
Yeah,
Whatever.
yeah.
Calm down. Calm down. What's going on?
All right.
135 billion. What does that mean for the global economy?
It means more money coming from China.
No.
To who?
So
Because when
shorts.
America says it's doing stimulus,
No,
we all know what that
Arnold.
means. So
Let's
China did
let's-
135
let's
billion.
start-
Is that
let's
a
start
drop in
from-
the bucket? Or
Let's start
like-
from where it is. Let's start from where it is. It is. No, so a lot of people have spoken, and that's because America has a lot more coverage internally than China has to the rest of the world. Now, of course, we can all predict or understand the direct effects of what this tariff war is happening on China. In China, on the other hand, if China didn't have the political structure to which it had, it has no right to be going at this war at this particular time because one, domestic spending is contracting heavily. It has grown. It has grown to a point where it is now way too big to be able to manage what it is. So it needs to be producing at a far faster rate. But now you are saying people are buying less. America has been taken away from you. Some other countries are beginning to be worried about your setup. Now the context is simple. China needs to stimulate the local economy, not only the manufacturers who you have also propped up with a lot of subsidies, because most of the manufacturers in China, not only do they rely on embedded subsidized infrastructure to be able to grow the skill they have, they still continue to get subsidies from the Chinese government. To
Likewise, the US as well, and most Western economies anyways.
No, but
Why are you thinking
not
it's
on
a
the
China
level
thing?
of China. Not on the level of China. But my point is this, right?
Tunji has the Trump cap.
Yeah,
There's a lot more impetus.
I would say, I don't know if it's probably a coincidence, but the trade surplus that China runs versus the rest of the world is about 900 billion. And the US contribution to that trade surplus, unlike what everybody wants to think, is about 15% of that number, which roughly is 135 billion. So do the maths. Somebody's trying to ensure that somebody absorb some of that
differential.
That's one thing that I think. The second thing that I want to say is, although China's domestic economy is weak, we need to also understand that the weakness in China's domestic economy, to an extent, is a policy choice.
Yes, that's the point. They went in that direction.
And the reason why they did, right? Because remember, when you look at Japan, right, one of the issues that Japan had during its ascendancy is the massive inflation in property prices and the property financialization of the economy, which meant that capital was being pulled into
Infrastructure.
into property,
Real estate.
into real estate. And real estate is not a It's not, you don't build a global competitive economy in real estate, right? So one of the interesting things I have found looking at the data in China is typically when you have a real estate bubble that bursts, right? You cripple your banking system, and that's how you go into a recession, i.e. subprime, right? But however, China's banking system is healthy. The growth of China's banking system loan book to industrial China is at an all-time high. That tells me that this is a choice. This is not property market that has gone ahead of itself. I think the China Communist Party looked at how assets was being allocated within the Chinese economy and wasn't comfortable.
So you're saying it caused a property crisis?
With the scale. They engineered the slowdown. You could argue, did they expect it to be this deep, etc.? I don't know. But they engineered the slowdown in order to redirect financial assets into industry. And what has that done today? China dominates. China no longer copies in automobile.
Yeah, they dominate.
Right. I heard, was it the CEO of Ford?
Innovation, by the way.
So I heard the CEO of Ford talking about ensuring that the cars they make live up to the Chinese standards.
He said that?
I'm not joking.
Wow. He said that?
Wow.
In order to be competitive. I was in South Africa 3 weeks ago. I was surprised with the number of Chinese brands that I saw. Right? Some of our OEM partners in the automobile company that we are invested in locally are Chinese. And you've seen some of those vehicles. They build beautiful cars.
Good ones.
Right? They build, and with they've been part of the IP that we've used to build some of the beautiful cars.
Sam drives one and Madam IJ drives one too.
Yes, of course. Yes.
Well, I've been waxing lyrical about their EVs.
You have?
Yes, I have. So I've always said that
They have a new Cybertruck, by the way.
There's
better
no
than,
way.
better
There's
than
no
Elon
way
Musk
the
Tesla
American
Cybertruck.
EV.
Better than Elon Musk.
No,
It's not just EV.
See, Tesla cannot compete. Tesla cannot. It's not even whether they can't compete with the average EVs coming out
So
of
what's
China.
Maga gonna do about
But
that?
And you know where, I think, can I just, because there's a lot of things, and you know where this is interesting. China has made a choice, right, to channel capital, people, resources into areas that I call industries of the future. Climate-related industries. They dominate solar, right? In fact, any non-Western OEM that pretends to do solar, open the hood, is Chinese IP.
Chinese IP.
Right?
Yeah.
Chip making now, it's becoming obvious that these guys are not behind anymore.
Yeah.
Right? So when you look at, and this is why Trump is worried about bringing Nike shoes back to Wisconsin. These guys are pulling ahead in dominant industries of the future. Right? So I mean, it's difficult. The US is a formidable adversary, right? And they've shown before that they've done it with Japan, right? And they won, right? They did it with the old Soviet Union and they won. They crippled Europe and they won. But these Chinese guys...
Yeah. I was reading
gonna
the
be
speech that
interesting.
the CIA, the head of CIA actually said the US has never experienced a more...
the 138 billion conversation.
Okay.
It's, first of all, it did not pump the crypto market. The crypto market had been on a pump. I remember, were we not, was it not last week we were talking about, or was a couple of weeks ago where we were talking about crypto, Bitcoin at 75K, 73K.
Yeah, 75, 77. I remember
Before this announcement, the rise had already started, even with negative GDP.
So what is
numbers,
what does the Chinese stimulus mean to the global markets?
Stimulus
is the question, right?
is
not a
their
big
own
number,
version of
138
QE.
billion.
No,
Is that
no.
enough?
It's not just.
thought you meant
It's
60 trillion
broken into
global
different
economy.
places. It's broken into tax cuts.
Yeah,
It's
138
broken
billion, that way is
into.
not.
If you can just
especially
read the different categories of what makes up that 138 billion. It is just their own version of QE because they need to
138 billion
stimulate
is
local
even in that
economy.
sense is
So China
It's a
is
drop
not
in the ocean
so
in China,
I
no?
think because of what I just articulated, I don't think China is going to do a bazooka stimulus. It's not. They don't want to build this property stuff. They want to. When I think Xi Jinping during the last 5-year plan, he's told you what his strategy is. he said that economic growth is obviously important, but what is more important than economic growth is technology dominance. That's what China is going for. And also ensuring that it is dominant in trade and building and investing in its trade routes. The thing is, in my mind, right, I feel like the US should have had this fight much earlier because the proportion of the
Are you saying Trump was right to fight the fight? Because I don't.
No, because the point now is
I think Trump started fighting this fight in 2017.
I think China is done.
China is a problem for the rest of the world.
I think China is done. I think China, the horse have bolted.
Yeah.
I think what you should strategically be thinking about is how do you survive in a world where China is dominant.
Dominated,
So to be honest with you, that is putting lightly what the US is still to the rest of the world. The rest of the world, and I shared the Prime Minister Wong's statement on this conflict. There's no pushing the US aside. Yes, US is saying we're rolling back on being global big brother in terms of security. We're rolling back in terms of because the US has been
the US is too dominant to be pushed aside. But the US cannot the problem with the US is that it is not comfortable with sharing the stage with somebody on close to equal terms.
Exactly.
But they're so used to being number one, they don't know what it feels like.
That's
so used to being number one.
Anyway, we gotta move on,
but
guys.
the US is going to be. So when I say when I say China is going to be dominant, I'm not one of those people that is calling for the decline of the US. It's not going to happen.
It's never going to happen.
It doesn't have to be this or that. It doesn't have to be this or that.
It's not going to happen.
I think the new global order will be this or that. The only difference,
but it doesn't have to be. It's just an alternative.
The only difference is that China doesn't have an interest in a lot of the things the US was interested in. For instance, being global big brother, securing China doesn't have any.
Trump doesn't have that these days anyway.
So Trump doesn't have it either. So everybody's now having to secure their different zones.
But that big brother gave the US so much leverage.
That world police.
But let's come back home, guys. Let's come back home. So, by the way, while we were talking, the Fed just decided to hold up rates. So, I mean, nothing new there. So, CBN, Nigeria Central Bank, releases annual report. I don't know why you guys had to. You want to take some water or something? I don't know why he was coughing. You want to take some water or something? Anyway, the Central Bank released his annual report for 2024, which was quite good because they released it on time.
Yeah.
I mean, wasn't like
which is good
for a year or two.
Yeah,
and
or 3.
Yeah,
we've seen 3 years.
So
ago.
profits were 38 billion.
Oh, lovely.
Naira. Huge reversal from 2023, which was about 1.1.
What was the gold holdings again?
$1 trillion, 1.1 trillion Naira loss in 2023. Strangely, they didn't release the 2023 financial
loss
statements.
in what?
Profit loss after tax.
For the CBN.
Yeah, 2023.
sorry.
Don't know if you guys saw those numbers. Anything, any sticking points there for you? I mean, you did eventually see your gold reserve numbers.
I forgot. I think it was so small that I forgot. What was it again?
I mean, like they made some money.
I mean, I think I compared it
just
to.
like
I compared it to a smaller country.
Reserves yet, anyway.
I was comparing
it
to a smaller country.
Been a strategy though.
Does it matter if the CBN makes or lose money?
Well, good question. Because I mean, a lot of people were
they
lost money in 2023.
Does it matter?
No, but that wasn't the number.
Why doesn't it matter?
Really.
Maybe that's the question. Why doesn't it matter?
What's
the job of the CBN?
Yeah.
Its mandate is not profits. As long as I think if this CBN, I don't know what.
But if the CBN is making losses, then if the CBN is making losses, then doesn't it mean that it means that it's subsidizing something?
No, but it might.
There's somebody on the other side.
The lender of last resort.
So
it's supposed to subsidize something.
It's left pocket, right pocket, right? So if the CBN loses money and it goes into negative, well, firstly, I mean, asset and I haven't spent time looking at the structure of the balance sheet that they've reported. But the point that I was going to make is if the CBN is loss-making but is achieving its inflation targeting mandate, does that matter? The only part that matters is that if it's loss-making to the point that it's up onto its reserve, it has to go to Congress.
But it can be loss-making and not achieving its inflation mandate.
It can, because think about it. Think about it. A huge part of unfortunately, where we are right now is that a lot of liabilities that the CBN is issuing are high cost liabilities, OMO, right? And obviously, OMO is important, right, in the short term for FX stability, right? So, and then a lot of assets that the CBN is basically carrying are basically zero yielding assets, right?
Yeah.
So how does it?
So as a result,
that?
by definition, outside of because I think one of the reasons why CBN's numbers, I haven't looked at it, but from the top of my head, the reason why the CBN didn't even report a loss in 2024 is because it has a dollar asset base and it has a Naira liability base. So from an FX translation effect, he's booked a big profit. But when you actually look at the Naira part of that balance sheet, it should be chopping serious skin. But does it matter?
It did in 2023.
But does it matter?
I think it does. I think it does.
Doesn't matter, though.
So I
does,
think what matters is the political embarrassment of needing to go to the House of Assembly to get
show
recapitalized,
losses.
right? I think that's the part. But in terms of real economic situation, I don't think I look at the CBN balance sheet and think
Central
about
Bank,
PNL.
See, I think that's your point. You don't look at Central Bank and think
PNL
about
I think
money.
PNL.
You think, are they doing what they're supposed to do? Are they managing the
might not
economy?
be
Are they?
conversation, but I think it making a loss also is a problem. It is a problem because
So unfortunately, the Fed has been booking a lot of surpluses. But the moment the Fed moves from QE into QT, the structure of its asset and liability spread shifts. It can lose money, right? Central bank can lose money to achieve your objective. You are issuing OMO at 25%. And on the asset side, you have nothing that is yielding anywhere close to that. Your spread is negative.
Yeah.
You will chop cane. But as long as SX is stable and inflation is declining,
But
why do you
even
care?
well, those bonds were issued in Naira now.
Yes, now. So the reason why they are, if you look at Naira, I haven't looked at the balance sheet, but CBN should be chopping serious
should, yeah,
Naira.
because of that
Serious
spread. Yeah,
Naira.
it should.
I get serious Naira,
Even
but
till
you
now.
talked about the dollar part because
Yeah.
the country generally earns in FX, right?
So they have different aspects to the balance sheet, right? Obviously, a big part of the asset that they have is the reserve.
Exactly.
That is a dollar-denominated asset. So because of how the FX has moved, right, that will translate into a big gain, unrealized, of course.
Exactly.
But on a realized basis, that OMO, they are paying it out. So if you look at the cash flow statement, it's going to be hugely negative.
I want to get your points in this from an accounting perspective, right? And how, because I'm seeing it from your perspective as an economist and as an investor, but from an accounting perspective, how do you think that feeds in to us with the central bank reporting the loss in 2023?
Well, before I answer that question, because I mean, I'm listening to Tunji and Sam. I'm saying that if you think that, I mean, central bank posting a profit or loss is of no use, then perhaps that's why Murphy hardly released numbers anyway. So like,
So why you releasing?
So why do you release it?
If there's a political angle to it.
If you release numbers and you're showing profit and loss, is useless to me.
Okay.
If you release numbers, I want to see the structure of your balance sheet.
Why should I release numbers if
I'll tell you why I want to see your balance sheet.
doesn't matter?
It matters now because I want to see how you are achieving your mandate.
Yeah.
And then that allows me as an investor to understand your decision function and the constraints that you have to achieve those mandates.
Okay.
So if like all of a sudden your OMO is exploding, right, and it continues to explode, right, you have to ask yourself, how sustainable is this strategy if something else doesn't happen, right? So so in order for me for me personally, the CBN balance sheet is far more important than the CBN income statement. It's also that balance sheet I will see the reserves. It's also that balance sheet I will know what the liabilities against those reserves are. And that gives me the sense of how much covered we are from a import cover perspective. So I care about the balance sheet. I want to see the balance sheet. But whether you made money or you lost money, if you lost money, it's hard to lose money, right? Because you're printing this money that you're making and losing, right? Because you're the CBN, you have automatic paying. But there are periods where you can go into negative equity and you wipe out your reserves. And according to our laws, if you do that, you need to go to Congress to get
recapitalized.
That process will be a political mess because people that don't understand what is going on, and I think that's why Murphy probably panicked. There's a part of me that also didn't believe that he understood that it doesn't matter that he lost money. But because he was profligate, right, and he didn't want to be, he will be made a political example. That's what he was scared of. I don't think what he was scared of was losing money.
So I think looking at the financial statements, financial statements do matter, particularly from a central bank perspective.
Yeah.
There are a number of things you want to look at. You want to look at the assets, you want to look at the liabilities. For the asset point of view, you want to look at what our external reserves
the balance sheet
is,
side
whether it's
is
robust enough.
Yeah.
You also want to see who their debtors are, whether for example, one of the sticking points was AMCON. You're still seeing AMCON debt on their balance sheet. You also want to see how much cash they have, and then you go on the liability side as well. You're worried. You want to see whether there's a lot of loans being booked, particularly automobiles. And one of the things that we did notice last year, or 2024 was. Or 2023, I mean, they didn't release 2023 numbers, but looking at 2023 numbers from the 2024 numbers that they released, was that CBN did lose a lot of money from FX, swaps and all the shenanigans that happened in 2020 just because you had to, get the Naira.
And if you're tracking the liability in the income statement, you will see those losses.
Yeah, they were all there.
And that loss is basically gains in the banking system. So as an investor, I want to know that.
Yeah, so the banks, the banks were on the other side, on the other side of those gains, obviously. And we did see that, happen a lot. And of course, and then on the other side, of course, in 2024, you did see reserves go up, and we all know why. Crude oil prices was up last year, and I think oil production was slightly stable towards the end of the year. So you did see a lot of that creep up, and then of course we did also see IMF loans or IMF drawing
bilateral,
also on the balance sheet as well. And CBN also did have accumulated losses as well, of course, from the 1.1 trillion or so, which was because of the swaps that we did have in 2023. And so by and large, it did look like realistically showed how Nigeria's currency situation has been over the last 2 years, right? So you've seen 2023 was that year that was very turbulent, where they had to take in a lot of losses because of the exchange rate situation. Now, but typically, what you also expect is usually when you have massive devaluations happen, CBN actually often makes a gain. Because you have revaluation surpluses from the exchange. But that didn't really happen in 2023 because of the swap liabilities that they took. And so that was interesting, some of the things that we saw. But by and large, I mean, it was pretty good.
You haven't answered our question. Does it matter?
Yeah, that's what I'm saying. From an accounting perspective,
I think it does. I think it does. It does for
being responsible. Just
no, right? If
that.
I have to make a
political aspect of the way.
Beyond that,
your responsibility is your mandate. If I lose money to achieve my mandate, I've done my job.
Well, yeah.
There's nowhere in the CBN Act that requires that I must post a profit surplus.
Yeah.
There's nowhere.
I agree with that. That I do not fight with, but I just do not.
I mean, but I think for a lot of people, for talking point's sake, there are people who are looking at CBN operating expenses. People want to see how well they're spending.
My personal view is that one of the reforms,
want to see
one of the reforms that I would like to see, right, very similar to what we have in like Singapore, is that let's take out monetary policy from CBN accounting. So you have like you have a monetary policy body, right? And that we don't, you are not looking at losses, you are not looking at profits, and you do what you need to do, and then you have your banking regulator, you have those ones, you can look at them from a profit perspective, but you cannot judge monetary policy on P&L.
There are quite a few countries that do that.
That run that. The UK runs a similar model.
So it's the packing up of everything into one. So that even speaks to one thing. So you've packed everything up. The banking regulation side. The question is, how do you make a loss on that side? Is the loss entirely from your mandate in terms of?
I suspect a lot of
stability?
Obviously those AMCON bonds are just amortizing, and I don't think there's any cash flow there, right? I doubt there is, right? But I really think a huge part of the negative spread is coming, because think about it, we've issued, I can't remember the number from the top of my head, but at least 10 trillion naira worth of OMO at 25% plus stops, or between 22 and 25%. On an annualized basis, that's a 2 trillion naira gain. There's nothing on the asset side that's going to compensate you for that.
At all. Nothing.
So what does that loss mean then? If that leads to a loss this year? What does it mean, essentially? So is it the FG that bears that loss?
No, well, it's the CBN. Ultimately, the FG, but I think because sometimes you book gains too, right? So you have to look at it through the cycle, right? But I think for me, the way I see it is that is the cost of achieving your mandate.
Yeah. All right. Cost of achieving mandate. By the way, CRR numbers, I mean, deposit with CBN was over 50 trillion. I think CRR numbers are probably half of that, which also speaks to a lot of the tightening.
The challenge with that CRR is that and I think that helps a bit because it then cushions a little because that CRR is the CBN is paying 0 on it.
Yeah.
Which is why Murphy liked it a lot. Right, because CBN
free cash
is basically liabilities that are costing you 0. And then he was basically, because Murphy became a commercial bank, so he took that 0 cost liability and he gave it to everybody.
Sorry to segue. One thing I've always wondered is how come we've had CRR at this, record levels?
I was about to say that.
0 interest rates and banks are still declaring massive profits. What's going on?
I mean,
is it one of the conundrums that we really can't explain?
I mean, no, I can't. I really. How much time do you have? But let me summarize. Let me try and
so that we can move on.
The first thing that I want to say is that we underestimate what the dollar balance sheet of Nigerian banking system is.
Really? I thought they said we have 35 or so $billion in total.
Yeah, but look at that as a percentage of your total assets. So I'll give you an example. Like when you have a bank, remember there's no CRR on dollar deposits. There's no CRR on dollar deposit. So if you have a bank, all the money in those DOM accounts, right? Unless you are, I don't want to mention names of banks. Unless you're a bank.
On total deposits.
No, it was on Naira deposits. So when you get wiped your CRR, it's on Naira deposit. There's no CRR on dollar deposits. So if you have a bank that has a dominant dollar franchise, you're not paying CRR on that cash, and you are lending that dollars out. I'm assuming you are not reckless. You are lending the dollar out in dollar assets that are yielding anywhere between 9 to 12%. That's why the dollar books of these banks, not only are they booking this FX revaluation gain, the spread on those books are very, very healthy. So that's one source of significant competitive advantage that the market underestimates. So the banks that have dominant dollar franchises like GT Bank will show great numbers. That's one. The second is because of very low level of financial illiteracy, even when you
low levels of financial illiteracy.
Financial literacy.
Okay.
So when you have a bank like, if you look at, I think the average cost of Naira liability for GTCO is probably 3% or less, right? If I take that 3%, right? If I take that liability at 3%, right? I give half of it to the CBN. The effective cost of that liability is 6%, right? It doubles. But my interest earning asset on that remaining half that I have, right?
30%.
Is 30%. So I'm only earning 30% of half of my asset. That is 15%. And my cost is 6%. 15 minus 6. That's my margin.
9%.
So that's why these banks are posting 10%, 11% net interest margin.
So why are they complaining about CRR then?
You said? Because obviously a bank wants to make money.
He wants to do more now.
He wants to do more. So he wants to do more, right? So that's why you see this.
I can't wait to hear Dele's perspective.
So that's why
I'm keen though.
No, these banks are the underlying profitability of Nigerian banks is
it's ridiculous.
I mean, I've looked at EM banks all my life, right? And I have not seen a banking system that is as profitable as Nigeria. Then obviously there is also because a bank is two things, right? It's a payment engine, right? And then a balance sheet management business, right? The profits that come out of that payment engine, right? To move money around, the costs of moving around. Nigeria is one country where if you put 1,000 Naira in your bank account, and by the end of the year, you might not see it. All right?
100%. 100%.
Because you're speaking to what everybody says. Do banks really charge a lot?
Yeah, we talked about this before. They charge crazy here.
Really?
Yeah, they do.
So
compared to like other countries for everything.
So think about it.
The fees are ridiculous.
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 So there's a So we were never really into the payment space. So my mind was never really on the, wrapped around what payments is. So you think usually payment is about the lump sum. So when you hear somebody say we've now, transacted $200 million, and your mind is thinking, oh, $200 million. No, it's the company would prefer that $200 million is broken into 10 naira.
And this is the velocity of the
it's
transaction.
the velocity of the transactions.
Yeah.
So when that 1,000, right, is how much transactions we can do on that 1,000.
Then the 1,000 moving itself.
You guess, so the 1,000 is not relevant to us.
So should bank transfers be free then?
It should be cheaper at least. Definitely cheaper.
I'm a bank shareholder. Okay, so the question is, they should be free. Why not?
They should be free. Bank transfers should be free.
Why?
Why not?
Where is it free?
With all the fees, with all the fees you're making.
So Nigerian banks are interesting in the sense that Nigerian banks are interesting in the sense that
everywhere else.
they want all their product lines to be profitable. Right, certain parts of the world, they use certain products to subsidize other products. So, for example, cost of transaction in the UK is 0, right? So to move money around costs you nothing.
Absolutely nothing.
Unfortunately, also the cost of maintaining that payment infrastructure for these banks are also not cheap. Go and ask the bank how much MasterCard pays them, charges them, or how much Visa charges them. Right, these are big costs, right? But the banks are just good at passing it on to customers, and we are not in a world that I think. And obviously, because brand and trust is also important thing, because Gouda tried to prove to the world that you can do zero cross transaction. But the problem is that how many of you moved your life savings to Kuda? No one did, right? Because you wanted to be with a big, credible transaction, so that at least if you...
People did the work.
But in terms of in size, right? So the point I'm making is, I think eventually competition should bring down the...
But they should have done that by now. How many banks are there?
Exactly.
They should have done that by now.
Sam, so if banks are making this much profit, why are we not seeing that in dividend yield? And dividend payout?
You have now opened another Pandora's
That's a completely different story.
So you have now opened another Pandora's box. Banking accounting can be funny. There is a significant level of forbearances in the banking system.
What does that mean then?
So it basically means that during COVID and during the Murphy years, there are a lot of losses, and there were a lot of loans that the CBN were like, if you classify this loan under forbearance, we'll turn the other way, right? And so, but however, if you have those forbearances, you can't pay
dividends.
There's controls
to
on
dividends.
the size of dividends you can declare.
But do those restrictions still exist?
I think so. I think I don't want to name exact banks. There's some banks that disappointed in dividend payment. My suspicion is that disappointment was a function of when they provided that they wanted to pay the dividend. The CBN say, until you write off this loan, you're not going to pay that money. Remember when Shegun was doing his conference call, what did he tell you? He said, he said, I don't have any forbearance loan. Okay, so when you don't have any forbearance, you pay what you want. That's why when he paid 7 naira, CBN didn't blink. This CBN is an orthodox CBN. It's not a CBN that's going to be controlling how much money you pay to your shareholders. It cares about system stability and it cares about deposit stability.
All right, guys, we got to move on to the last topic before we go because we've done over an hour already. And I mean, like, I can see the producer asking me, like, oh, good day, what's going on? You're back.
Opening topics that take hours.
I'm sure the next one's going to be another 1 hour.
Topics that take hours. Like, you can get me to talk about Nigerian banks for hours.
I know. So we're going to move right into equities, right? So, I mean, just a perfect segue into equities. Like, we've seen a lot of numbers. Q1 numbers are out already. Particularly FMCGs have been flying high. Even bank numbers, I mean, not as good as it was last year, but we did expect that banks wouldn't produce the same sort of numbers they did Q1 last year because FX is not at the same level it was last year.
I preferred the bank numbers in Q1 this year than last year.
Last year.
Why is that? I'll look at GT Bank, for example. Look at it. They did 509 billion in PBT last year. This year they did 330. But when you look under the hood, the core income. So when you strip out the FX revaluation gains that came from the Q1 numbers, I think they booked about 300 and something billion plus in FX revaluation, which is non-cash. So when you actually look at core income growth on a year-on-year basis, GT Bank, they probably did 100 and something billion last year, but did about 270 something billion this year. So you look at it on a year on a
But
cash.
what does it matter for you as an investor?
Because when CBN is deciding, when these banks are deciding on the dividend they want to pay, they look at cash earnings. They don't look at revaluation, which is why you had that massive drop in payout ratios. But when you adjust those payout ratios for cash earnings, the banks were paying the ratios they normally pay. It's just that a huge proportion of earnings were unrealized. So cash earning is what determines your the dividend that you receive. So the banks with the higher cash earnings.
So cash earnings were a lot more for banks, basically.
And this is the trick. If you look at cash earnings in Zenith Bank versus GT Bank last year.
How do you calculate cash earnings for the banks anyway?
Or that's another. Or we can open. that's another. We can open. There's a lot of disclosure in the financial statement.
You know when you're talking financial stuff, like I enjoy it.
We can have that conversation. There's a lot of disclosure in the financial statement that it's not accurate.
Yeah,
but we can estimate what cash earnings is. So which is why one of the reasons why I think Zenith Bank's Q1 numbers was very high quality versus full year numbers last year.
Yeah.
Because the proportion of cash earnings, I feel like when you look at cash earnings analysis between Zenith and GT, you really understand the dividend difference.
In the banks,
right?
Yeah.
But I think that will change this year. A lot of the numbers that I saw in Q1
in what way? Zenith now becomes
I think
Zenith dividend is likely going to go up this year.
I think Zenith, because the cash earnings supporting that dividend is higher. I think
they weren't happy with what they did last year.
I know. If you look
Zenith
at
themselves weren't happy. Dividend
numbers. Shareholders doesn't like it. So they got to compensate this year.
They will have to, but also the capacity for them to compensate. I don't really just think, because if you look at nominal numbers alone, you just think, they made all this money, they didn't pay me.
Yeah.
What proportion of that money
is cash?
And what proportion of your asset? Because CBN will tell you can't pay your unrealized gain.
Yeah.
And also, if you have forbearance, this is the maximum you can pay.
Yeah. And that reduces how much.
So you have to ask those questions first. So which is why, I think, right, a bank like GT Bank is going to pay its market cap over the next 4 to 5 years in dividend. There's no restriction on distribution.
You're free to pay anyway.
There's no restriction.
GTB market cap is almost 2 trillion.
His stage 2 loan is 2% of his loan book.
Interesting.
It's 2% of his loan, and his loan to asset is like 20%. So that
you're already making people. I mean, you're going to make our viewers want to go buy GTB stocks. I don't know. Any stocks interest you?
I mean, it's just been the usual.
The numbers
right?
that we've seen.
We talked about Lafarge last week. I like Lafarge. I talked about. We've had this conversation.
Lafarge numbers were
the trade is
but I mean,
when is he at 79.82?
But haven't you anyone missed that boss already?
Well, the dividend trade is done. The dividend trade is done because they pay that especially.
The transaction is because I think you get taken out at like 103 and the stock is trading
so
at
for me,
80.
it's so for me, it's still there.
I'm still long.
Which other one?
GT. I've always liked GT. Everything.
I thought MTN was solid.
I like MTN. For some reason, MTN just seems suppressed. So MTN
gained 10% this week already.
Yeah, but still, I feel like it has more upside. When you think MTN has more upside, it's not showing the upside. I'm not seeing.
Let's remember, MTN has negative return earnings.
It's a negative return earnings.
I think it will. So there's a huge part of this market that just buys dividend. Unfortunately.
Yeah.
I think
because that's the only
because that's what there is right now, right? Yeah, that's what there is. Because upside feels
the only thing I would say is
because of liquidity.
The
so you
pace
have
at which MTN is going to close his retained earnings will shock everybody.
The pace at which it closes retained
without raising equity.
Okay.
MTN does not need to raise equity.
MTN will not raise equity.
It will not raise equity.
Wow.
Hot take.
What? That's a hot take.
Do you want me to explain? Do you want me to explain?
Yes, please.
What's the negative return? About 600 and something billion.
Yes.
Right? That's the negative return.
Yes.
In Q4 last year, MTN made about 14 billion, give or take. I'm just trying to remember from the top of my head in PAT. That basically took almost 100 billion of the retained earning, right?
Okay.
In
that's loss.
No. So in PAT,
are you talking about Q4?
In Q4.
Yeah, Q4. Right? Because you're 163 billion naira.
PAT, because that's what goes into your retained earning.
114.
114. That's why I say 114 billion. So that reduces your retained earning by that delta because you're not paying out any dividend.
Retained earnings went from 723 to 607.
Correct. Okay. Now check end of Q1. What is retained earning?
Q1 is 474.
477.
So you can wipe that out.
So think about it. so the price increase, so these numbers you are seeing in the top line, 40% plus, has happened, right? If you look at what is driving those numbers, it's not pricing, no. It's increase in net additions, both on the data and on the voice side.
Yeah, but
right?
even if but
Let
they're
me
gonna
finish.
need okay.
Let me finish.
Okay.
Right. And then the price increase of 50% that NCC has allowed them to do, for that Q1 numbers that you're looking at has only been reflected for 2 weeks.
Yeah, in March, last 2 weeks in March.
So 50% price increase on top of that top line momentum that you are seeing. What do you think PAT for Q2 is going to be?
So are you saying that MTN would likely wipe out this 400 or so
in 2025?
$500 billion
before Q4.
So
Q4.
at what point did they then pay dividend?
Next year, 2026. Or they could pay a small dividend this year and next year pay a big dividend.
Hot take. Tunji, any particular stock catch your attention?
No, so mine is more strategy right now. So I'm just trying to load up. So
What are you loading up on?
trying to fill the bucket really. Buying some Honeywell, buying some Better Glass, so trying to fill
Better
up.
Glass was interesting. Better Glass was interesting.
Yeah, Better Glass had good numbers though. Yeah.
No.
I like Better Glass though. I like Better Glass.
So that's
I
a
like
business
Better
that has a dominant market position.
Yes.
Yes.
You know what
Supplies
makes Better
into
Glass
FMCG.
special? Yeah. Particular. So I think so Better Glass as a company, do they have a moat that nobody understands? Because it appears that they're the dominant glass producers in Nigeria, and so they supply. So they basically bottle most companies. Most FMCGs.
Yes.
So doesn't that make them?
So that tells you the underlying momentum that is in that FMCG space. Remember, like when you look at FMCG numbers, right? Your Q on Q numbers, so Q1 on Q4 tends to decline. Go and look at the FMCG numbers in Nigeria. They're all going up.
Yeah.
So there are volumes that are coming through. And then when you look at people selling into the FMCGs, the Better Glasses of this world, they showed record numbers.
So guys, what does this mean about Nigerian consumer?
So this is the thing.
Where are we getting all this money from?
I want to say this thing, right? So you can be like Ugodre and Sam and be into all the technicalities. Me, I look at what people are buying. As in, where are the people going? What are they eating? So Better Glass, for instance, it's just like those chip makers and then powering AI. You see who they are selling to. The FMCGs. You see how much people are still patronizing those particular goods and services. So you kind of know that, okay, this guy is going to make money down the line. So if you look at my portfolio right now, it is either tied to directly to food and beverages, or
Banking.
Do you get?
How liquid is Better Glass? Is it liquid?
It's not very
It's not liquid, right?
You can't build it. That's my biggest problem.
So this is the problem I've been having now. So I've been begging on. So every time.
What
I
about
try to buy
Cadbury,
it-
guys? Anyone looking at Cadbury?
See, I think consumer stocks in general should do. You asked a fundamental question which should be addressed, because this is a question that I've asked my team to investigate.
Yeah.
I have views, but for me, before I put money behind something, I need to see data, right? Which is why are consumer companies strong?
Exactly.
Right? Why?
Because
Right?
Nigerians are spending more, prices are going up, and volumes are being
Volumes
pushed.
are going up. I think there's a change. But I haven't been able to validate this with data. There are two things. Although somebody countered me the other day, there are two things I think is happening. I think there was significant level of cheap import substitution that was happening in Nigeria when exchange rate was stable, right? So a lot of people were bringing products from Turkey, from China at really cheap prices, and they stole away market share from the listed players. And now that it's become so expensive to do that, I think there's a market share gain trade that is happening. Secondly, so that's one. No data. This is just me speculating.
That sounds
Two,
possible.
Yeah, two, I will have to look at the data to validate. Two is, I think also weaker players because what has happened in Nigeria at the moment is that if you are a young guy who is doing a small FMCG manufacturing, your working capital needs have just tripled. If you can't finance it, you shut down.
So it doesn't leave the market wide open.
So that means
for the strong FMCGs.
for the storied FMCG to gain market share. So I think some of that is happening,
playing out,
right?
yeah.
And then the third part is, I also think about it. I mean, there's nothing in this world, right, that is going to prevent me, let me say for the sake of argument, from buying toothpaste, right? I'll buy my close-up, right? Regardless of how much you increase close-up price. Because my demand, for people like
those
a
are
consumer
different
like
goods.
me, my demand elasticity. So the way I see it for consumer goods is the people who have elastic demand profiles, right, have already dropped off the consumption basket. So these FMCG know this. So this FMCG business are now trading like how Louis Vuitton will trade. It doesn't matter how much Louis Vuitton hikes his price.
People still buy.
People will turn up and buy it because you have cannibalized your elastic part of your. It's not good for the economy.
So
right?
I do not like the fact that we keep on skipping the consumer themselves.
But isn't
There has been a slight improvement in terms of purchasing power.
But how?
Across
Where did that
board.
come? How did that come
No,
from?
across board. Salaries have slightly gone up in many places.
So if you are like in an industry like ours, like
Yeah.
obviously in finance, we've all hiked salaries.
It's
right?
not even finance, it cuts across board. Even NYC fees have gone up
as well. Yeah,
over,
so that could also feed into.
so it is directly
into some
But
of
the,
the
the dollar value of what you are buying has also gone up.
no
too.
substitution has happened. Substitution as in across board, substitution has happened.
I'm hearing now that you go in the supermarket and you see made in Nigeria and you see foreign products and
You
all you're
buy
looking
made
at
in
is price.
Nigeria.
No, you're looking at price.
Who
you don't really
what
care.
do you care what
No.
You're looking at price. So whichever one is cheaper, and it kind of looks like
who
made in
looks
Nigeria
at
products.
where it was made? As long as the
long as
particular
it's
product you
affordable.
want to buy is the
Yeah.
one you want.
Okay. Right,
So
right.
so for instance, the FMCG companies they have the imported products and they have the made in Nigeria product, and they're all on the shelves, right? So for like the toothpaste you just spoke about, there are many, like you have different, there's the one with herbal, there's the one with that makes there's the one that has a activated charcoal, there's all of them and I'm looking at all of them, I'm looking at which one is the cheapest. Even when I go into the pharmacy and I want to buy drugs, I want to buy paracetamol, which is a generic.
That shouldn't be driving your volumes.
No,
so
no,
that's counter to what you're saying,
point,
right?
My point is the substitution. I'm talking substitution now. Substitution has happened. We are focused more on the production, the production that is happening in Nigeria. So if the production is so
your point is that volumes are driving for local
import substitution.
exactly.
Okay, I agree
So
with you.
the substitution is the heavy thing. So,
But-
so we have slightly more income. Slightly.
Yeah.
I'm not saying more.
Yeah.
It's like slightly more income. But we are now focused on buying made in Nigeria, not
we want it to
because
last
we
longer.
like made in Nigeria,
Yeah.
but really it is
I
just
believe that,
affordable,
but a
yeah.
counter argument that somebody basically told me when I was making this, I made this argument with someone, and it was like, the truth is that there wasn't a lot of substitution in beer. However, we are seeing
Volumes are moving
significant
up.
volume growth in beer. Because
Without prices going down anyways.
yeah,
No.
Is that an outlier?
But with beer might be an outlier because there was a time the Guinness and the major brands
Nigerian
were
breweries.
suffering. They were losing market share to the challenger like Hero.
So could that be improved distribution?
And again, they
Could that
started buying the smaller brands. Bought up Origin. Those started to happen, and it's consolidated their sales numbers. So yes,
Interesting stuff's going on, guys. We gotta move into buy sell or hold.
anyway,
Interesting.
just the consumer is interested.
Because it was good.
Interesting stuff. And guys, this has been Drinks and Mics, brought to you by Naira Metrics, of course. It's been a very interesting discourse, and we're going to move straight right into buy, sell, or hold. We have a number of buy, sell, or hold questions here for us. Gonna start first with oil price, of course. And my wager here is not my wager though. Not my wager. Just a question. All I do is ask questions, and please don't ask me back. Ask questions. Buy sell.
Somebody said.
Arnold has a way of throwing back the questions. I mean, this is buy sell or hold. I ask
Say
the
you
question.
see, he doesn't answer. the
Buy
answer.
sell or hold. Oil price hitting, below $60 end of the year. Buy sell or hold.
Ask them first.
You
no,
first.
No. So it hitting below $60 is It's
Like
possible.
average, going to close below $60 from now to the end of the year.
What does-
That's going
what
to
does
We
below-
exit at $60.
yeah.
We
At
end the
below
year at
$60.
$60, so average is $60.
At below $60. Yeah.
Okay.
Okay.
That's
As in December, why?
yeah,
from now to the end of the
average.
I buy. I don't think it's much lower than $60, but I do think it's possible that it could be less than $60.
Yeah, buy to trading below $60. Yeah, I think it does. I think it does.
So we all think demand
Because that
demand's
below
gonna
is
like-
very wide. It's below
Yeah,
is
the real question is if it's going to get to 40.
I'm gonna get there. That's my next.
If you were gonna
If
say
you had said
30,
40,
that's what you
30,
talked about.
I would have said
then
30.
it's
We're getting there. We're getting there. My next question, of course, is buy, sell, or hold. Would Nigeria survive economically at $30?
survive.
Tomorrow.
What does survive look like?
Economically, like, are we going to go into a massive recession
Oh, I'm selling that.
Yeah.
Inside.
at $30? Do you think government can basically hold things?
Figure it out.
Yeah, I mean, we've been there before anyway. But do you think this government can do it? Buy, sell, or hold?
I think I can figure it out, and I'm not as smart as the people who are there, so I think they will figure it out.
So that's a
I-
buy for you.
Yeah, so I don't think
$30.
I think we will still do. We might not do all the things we wanted to do, but we would make some. We'll be okay. Like I said, we'll be fine.
Bye.
Yeah, bye. We'll be fine. We'll survive.
Yeah, I mean, listen, I've seen countries come out of some terrible.
So you think we
hard times.
won't go through a recession
Listen, I'm like,
if oil
see-
price is $30?
See, I've seen like, for example, I've seen Ghana, for example, go through what Ghana's gone through and still be okay.
No,
As Tuji says, right?
We'll be okay
The
at
Ghanaians,
recession, is what I'm saying.
Ghana equities
I
were
think,
20%.
I think there's,
this
in my
year in
opinion,
USD.
with Nigeria, there's close to. It's a bit arrogant to say this. I don't want
Yeah,
to
you don't
regret
want
it.
to. You don't want to. You don't want to
but I think there is a extremely low probability of a recession in Nigeria.
very low.
Low.
Yes.
Very,
Yeah.
So
as
at
in-
$30 per barrel,
And
you guys
recession
are,
by
you guys
definition,
are,
I mean
back-
negative
you guys are
GDP.
saying that
GDP.
there won't be a recession in Nigeria.
technical
At
recession.
all.
No, I don't think so.
I mean,
Wow.
test
I
the
don't think
streets.
so.
Test the streets. The streets.
Remember,
Wow.
Ugo Dre, Nigeria is already, over the last 2 years, we've lived in a $30 per
Exactly.
barrel oil
We've
environment.
gone
We've
through
seen us
hell.
go through some
We've
tough
been-
times. Yeah,
it's
I've seen us
almost
go through.
Like if you can't sell your oil or you are selling it and people are stealing it, your oil price environment is zero. It's $0.
Is that-
And you
is
be
that-
okay.
is that- is that- is that-
Is that your base you're coming
That
from?
Instagram skits where they say that you're going through a lot, that I'm just coming back.
Yeah.
So
You get
that
what
guy
I'm
just
saying?
coming
What's the
back.
skits? If we
I'm going through a lot.
if we had
I'm
a
just coming
functioning
back.
economy
Yeah.
at $60 and we had all the multipliers and we had all the flow throughs
Then
and
you'd be
everything
worried.
was fine, then I would be concerned. In my mind, the way that 2022, 2024 oil price, if you can model it, is probably $30. So it's now the delta, right? I was really bullish because I thought that you are not going to move from maybe a $30, $40 oil environment effective to a $60 oil environment. Even though the oil price doesn't change, it will look like, it will feel in the economy like you have a 50% increase in the oil price and life will be good.
I guess I'm the contrarian here.
I don't think that
So you
will
think we're going into a recession at $30?
I just said I guess I'm the contrarian.
Who's
here.
going to push it into a recession?
Buy, sell, or hold. With the way the economy is going, with the way oil price is going down, the exchange rate hitting that 1.6 to 1.7 levels.
Yeah, it happened.
Before the end of Q2.
I think 2,000 is the price that we have to figure out.
I will sell
End of
2,000. I'll
Q2.
sell 2,000.
Yeah.
I'll buy. I think my view is a band 1.5 to 1.7 is what I think.
I'm
think we
saying
get
that.
Q2, we
I'm
get- we can-
saying
yeah.
that at the
What
end
is
of
it,
Q2 we're going to be
1.615
at
right now?
1.7.
Yeah,
Is that what you guys are
We're
saying?
Q2 now. Yeah.
No,
End of Q2.
so-
Q2, 1.7.
Like Q2 is
Yeah, we
Q2
do.
ends in June.
Yeah, we
No, I don't think we'll get to
No, we
1.7.
don't get there in
do.
Q2.
That's what I'm asking.
I
I think buy we do.
1.7. I
Yeah,
said.
I don't
I think
think
we
we
hit
get-
1.7 in Q2.
I'll sell that.
You
Let's
sell.
let's bookmark this
God.
conversation.
All right,
This
guys,
is-
you had
this
you
is-
had
this
the you had the crew. I mean,
Nigeria is more resilient than this. So I'm telling
mixed
you.
views, mixed views.
They are not, but you
Mixed views.
cannot push something that is already so down.
Yeah.
Mixed views.
As about the floor.
Buy, sell, or hold. Buy, sell, or hold. Amcon, right? Amcon has been like,
I never understood
a
that thing.
thorn in Nigerian economy as a whole.
So to throw away Amcon, that buy sell or hold?
And I mean, at some point, we do know that this is an orthodox CBN, right? And they've been managing Amcon for a bit. Buy, sell, or hold. Amcon is dying in 2 years.
I thought Amcon was dead already.
Amcon in my
dead
mind
yet,
is
still
side by
alive.
side a Jalkuta Steel Company. You know, when we're talking about sunk cost, embedded sunk cost with subsidies attached to it, is the kind of thing where you release it and let it go. You know, you just take it to the wild. And
wonder how they-
So very quickly, I think
Bye-bye.
I think NDIC should be strengthened and Amcon should be worn down. That's my opinion.
You think
And
that's likely going to be the next move?
if this is an orthodox CBN, right? Because like Amcon was supposed to be a 10-year resolution vehicle
Yeah,
anyway.
10 years
Yeah.
go fast.
It's overlasted that. And the problem is that the way Amcon is currently set up, it penalizes the bank that actually behaves the best.
Yeah.
Right? Because you are paying a spread. I mean, the cost of Amcon is 50 bips on total assets, right?
incredible.
And the size of the
Yeah,
asset base of these
yeah,
banks have
that's high.
exploded.
Yeah.
So when you look at Amcon charge, after operating costs is the next big charge. And basically, so if you manage your risk well, you run your bank well, let's say GTCO, right? You are paying almost, and then your balance sheet is bigger. You are paying the same Amcon charge, right? And you are being penalized. If you're a small bank, I won't mention name, that have had a hopeless asset quality, right? And you've basically fretted away your customer funds,
And then
right?
you're paying the
And
least
then
to
you're paying
Amcon.
the least to Amcon.
And then you're going to get the biggest gain
Yeah.
when you do collapse
When
because you benefit from
because you
Amcon.
benefit from Amcon.
Yeah.
So the incentive system is distorted. So I understand you need bail-in and bail-out vehicles to deal with asset quality issues. And the issues is that the level of forbearance loan in the system has to be dealt with, right? I don't think that mechanism of dealing with it is Amcon. I don't know what the guys at NDIC does.
Yeah. they pay, depositors who have money in
So there
stock in
are
failed banks.
bail-in and bail-out
And they do
mechanism.
that.
I think personally, fold and let NDIC absorb Amcon.
Yeah.
Strengthen the institutional capacity of Amcon and split with the bank. Because I think a huge part of why Amcon doesn't want to be resolved is largely because of this. Who is going to take this trillion of liability that is sitting in CBN's balance sheet? Who's going to chop that cane? Sit down with the banks. I'm sure the banks will be happy to pay an MPV of their payments, a portion of the MPV of the
And
payment,
paid off.
one-off,
And paid
and
off, yeah.
unwind that.
You guys
So
got
we'll
a
just
good
agree
idea
that,
there.
yeah.
All right, last buy, sell or hold. I mean, there's this talk around, selling me and then come back at the end of the year. I don't know. You guys heard that before?
Tell me and go away.
What?
Yeah, selling
me and go away.
Yeah,
Selling me and go away.
So I mean, but we're seeing equities essentially
Global equity or Nigerian equity?
global generally. We're seeing global equities dance
Bullish.
and all that. In some parts it's bullish, in some parts it's bearish. So I mean, I want to start with you first. Samson, are you selling to me and going away?
Me?
Yeah,
US
Buy, sell,
equities or global. So I love
sound
it. So
like
my view is
US equities selling may go away. You're
you
buying
can't,
that or
you
not?
can't pay me to touch US equities right now.
For real?
Yes, I'm done.
So you're selling Nigerian equities?
Buy. Europe, buy.
Ooh.
Yeah.
Oh.
Yeah, so Europe buy, Nigeria buy, US hold.
Oh.
Yeah, US hold.
Europe by
Gold buy.
How about gold have suffered a wash recently?
No, but
Nigeria
come
buy.
Yeah, that sell off was huge.
Nigeria
though.
buy, but
Hey.
US.
No, but
I'm not
it
holding.
had to. It was
I'm
very top. Gold is
actually,
very
I'm actually
toppy.
emptying my
Very,
US
very
technical,
portfolio.
it's technical.
Yeah,
Now, the reason is simple. I'm not sure I was very comfortable with the lack of faith they had in themselves.
Who?
The US CEOs. It almost felt
Lack
like
of faith that was.
If it's you, will you have faith?
no.
After what Trump has done.
Anyway, ladies and gentlemen, I'm buying US, I'm buying Nigerian equities, I'm buying EU. This has been Drinks and Mags.
I have faith in myself.
No,
And I'll
but
be more bullish.
You
You know.
He has the bag of hats.
I know,
We gotta go, we gotta go,
hat.
guys. We gotta go. This has been Drinks and Mics brought to you by Naira Metrics. Another explosive episode. I hope you guys enjoyed this. And of course,
no, the topics,
you guys
the topics you picked is a 4-hour conversation.
To do justice to those
we won't always come back to this.
couldn't really touch. We couldn't really go into any of them.
Left for these guys, I want to go 3 hours. I know have you wanted to go 3 hours.
I want to go in on that China 138 billion.
We will come back. I mean,
we can do it in the
let
comments.
me know if you like Tunji's gift. Did I do it well? Tunji's gift.
Yeah.
If you don't, just let me know in the comment section.
Brilliant. See you guys
Of
next
course,
month.
see you guys. I mean, we get Sam again
next
next month. in May. And we'll see. Are we in May already? Oh,
We are in May. We're in May.
Yeah. Okay. So we'll see some
In June. Yeah.
Until we see next week again, do have a profitable week ahead. Peace.